Good day, traders, and welcome to the premium newsletter dated May 30th, 2013. Two reports came out this morning, and neither were very positive for the economy. The numbers of Americans seeking unemployment aid rose last week, a sign that layoffs have increased, the Labor Department announced before the opening bell this morning. Claims for unemployment aid rose 10,000 last week to 354,000. The government also lowered its estimates for U.S. economic growth in the first 3 months of the year to 2.4% from 2.5%. The stock market has been very choppy all week, and there's something really interesting setting up here. Historically, markets go up on bullish economic news, and markets go down on bearish economic news. But now traders are fearful that positive economic news will cause the Feds to stop putting in $85 billion each month into the market, so bearish news that demonstrates the possibility of the economy staying weak send the market higher today. I never thought I would see a time that negative economic news could be positive for the stock market, but we saw it today. Technically, the U.S. stock market is setting up for a symmetrical triangle. Typically, symmetrical triangles are consolidation periods that cause a pause in the trend. The market usually continues in the direction of the trend after trading outside of the triangle. Further, the breakout from the symmetrical triangle is known to carry substantial momentum and can cause a rally sometimes early or middle of next week. Today's free video newsletter demonstrates a symmetrical triangle pattern. I highly recommend you review that video as well as the links I attached to this email that discuss triangle patterns. The next point of resistance for this market is near the 1675 level. I believe the market will try to rally a bit, but further will not be able to break the high level achieved last Wednesday when it hit the 1687 level, unless there's some strong fundamental news that is not priced into the market at this point. I still feel the market is temporarily overbought and may try to break out, but will fail near the previous high point. Let's take a look at our existing positions and see what they're doing today. MGA broke out to a new high level. The stock closed at 67.56 after trading as high as 67.90 at one point in the day today. I would like to squeeze another point profit from this stock, so I would put a limit order near the upper $68 level or close to the $69 level and see if it triggers. I don't believe that the stock market or the stock is going down tremendously, and the stock is outpacing the strength of the market. Don't be too fast to take profits in light of this situation. The second existing position I want to discuss is PFE, Pfizer. The stock is showing weakness compared to the stock market, and that's exactly what we want to see with our short positions. This is the benefit of going with the trend on all of our positions. The stock closed at 28.25. Only a quarter shy of our profit target. Remember, I don't want you to take off the entire position at this level. So if you have a small position, please consider staying in the stock till it hits the $27 level. The third position we're holding is FMX, and it's very close to our entry price. We still have about 2 points before our stop is executed. The stock doesn't seem to be moving too much during the last few sessions and doesn't have too much volume coming in. I recommend holding the position because there's substantial weakness in this stock, and I'm looking for a few funds to unload some shares in the coming days. The stock is not very liquid, so a good selling cycle should knock the price down to our target level shortly. I will update you when things develop. Because the stock market has been so choppy in recent days, there's no new setups for tomorrow. The only signals I currently have are for low-price stocks, which we do not trade. This is one of the best indications that the market is in a consolidation phase. Typically, when markets are breaking out, I generate dozens of signals each day. The last 2 days, the markets are not demonstrating any extreme directional bias, so I would suggest waiting for the market to tell us what it's going to do next. The only fundamental report to be released before the opening is personal income and expense tomorrow, and it will be released about an hour before the opening bell. I will update you tonight with anything new that I see developing. Have a great evening, everyone, and I'll talk to you tomorrow.